I love what you wrote in your recent note. Maybe it was the day before Christmas. Investors shouldn't be FOMO-ized. Explain that to us.
Shouldn't feel like you're being, fear of missing out, right? You're FOMOized just because the market, especially these last couple of trading days, right, where moves can be exaggerated and they feel like they're missing out. And oh my God, like on Tuesday, the market ran, right? I think it surprised everyone the way it ran. This morning we're going to be off. And so they feel like they're going to miss an opportunity. They're not going to miss an opportunity. As a long-term investor, if you're already invested, you're participating, take your time and be patient with new money that's being worked. Don't feel like you're being forced into doing something just because the market, is up and you feel like, oh my God, I missed it. You haven't missed it,
Kenny, as you think about the keys to the Santa Claus rally, in order for us to continue to see gains, and as we begin today in negative territory, but just fractional declines compared to some pretty sizable gains that we saw to kick off the Santa Claus rally just before the holiday, what are the keys to that trade?
Listen, it more than likely will get like a little push into the end of the year, right? But I think we're right here at the top. I think where we are 6,000, the mid 6,000, like 6,050-ish, is probably where we're going to end up, right, as we move in. It's been a great year, right? You can't really complain about the stock performance for the year. But look, as we move into the next 4 days and then next week into Friday when it ends, that Santa Claus rally period, it's going to really set the tone for a lot of people, right? Typically, when we see that Santa Claus rally advance going into the first week of January, that sets the tone for the new year, right? But again, there's a lot going on, right? We've got a new president, we got a new administration, we got new policies that's going to be introduced. So investors need to kind of just sit back and watch this unfold, right? They're already invested. They've got money put to work. They're in a well-diversified portfolio. They shouldn't feel like, again, they're missing out, but they need to rush to get in. You absolutely don't. I think you got to let this play out a little bit as you move ahead. But one way or the other, especially these last couple of trading days, I wouldn't be making any major decisions on your portfolio, based on what we see today, Friday, or Monday, Tuesday of next week. I would just kind of sit back and wait and see how it plays out.
Kenny, our chart of the day here at Yahoo Finance was looking back at the weighting of the top 10 stocks in the S&P 500 has never been higher, about 38%. I mean, these are some of the biggest names: Nvidia, Apple, Amazon, you name it. Do you see or do you sense from the folks that you talk to an appetite to buy more of these stocks in that first week in January when people start plotting out their portfolios for the new year?
I don't see that anyone's, people I'm talking to or investors that I'm helping manage your money, that people are going, the first week I got to get in, I got to buy more of those names. Not at all. In fact, what I would say to them is names that are stretched, and there are a lot of them that are stretched, you got to be patient. We already own them. They're part of your portfolio, so no need to feel like you missed it. Let's be patient, let them pull back. But on a pullback, when stocks go on sale, good names like those names, right? You're talking Apple, Amazon, Microsoft, IBM, names like that are great names to buy when stocks go on sale. And so I'm talking to clients, and when clients talk to me about, wanting to get into those names, it's about being patient. It's about getting in at the right time, not just getting in to get in.
And so with this in mind, what is the kind of valuation structure that you're, an assessment that you're applying, given some of the most overcrowded trades seem very, very highly valued at this juncture going into the start of next year?
Right. So again, we're not chasing them, right? They own them. And I would say to people, I would say to investors, take some of this new money that you're using and look for opportunities in maybe the sectors that have underperformed, or stocks in other sectors that are large cap, that are big names in those individual sectors that you're going to use as ballast for your portfolio to provide stability. Look, like anybody, you don't want to be overweighted in any one sector. I mean, if you're 20 years old, maybe that's one thing. But if you're 50 or 60 years old, then you absolutely don't want to be overweighted. You want to have a much more balanced portfolio. And so you're going to look for those opportunities. But again, like anything, don't go chasing stretched valuations, because as we know, trees don't go to the sky. At some point, it retreats. And that's kind of what we're seeing. That's kind of what we've been seeing over the month of December, right? Stocks are actually down in December for the most part. If you look at a lot of stocks on sale, they're down 10%, they're down 12%, and those are the opportunities as long as they're good quality names and they're down only because of a market cyclicality versus the thesis changing in those stories. And I haven't seen, the thesis change in Apple and Amazon and Microsoft and Nvidia. The thesis has not changed. So on any weakness, we'd be putting more money to work.
All right, Kenny, we'll let you get back to the kitchen and do some more experimentation for that next recipe that's going to get tossed in to the Substack. Appreciate
I
it.
think it was the oregano this morning. I saw a note.
Shrimp oregano.
Oh, oregano, there we go. Oh, man, love it. I'll tell you about my cheese plate
Brian,
later.
I got to tell you, I agree with you. Starbucks, burnt coffee, I can't
See?
stand it.
I mean, come on. Can we just get a little bit of an Italian espresso?
I'm a Dunkin' Donuts guy.
Oh, man.
I'm a Dunkin' Donuts guy.
Dunkin's bird too, Kenny. McDonald's. Give it a try. Iced coffee.
Or you guys could just make it yourself. Right?